For most Poles, no Christmas would be complete without carp for dinner. But with prices rising, shoppers whose budgets are already stretched by surging inflation are having to spend more for their favourite festive fish. Poles hold their main celebration on Christmas Eve, with carp as the centrepiece of a 12-dish feast that is traditionally meat-free. With inflation in Poland's economy deep in double-digit territory, fish farm owner Michał Gorski says rearing carp has become much more expensive. He's had to hike the price from last year's minimum of $4.10 per kilogram to $6.80. However, some shoppers, like Eva Hunkiewicz, aren't put off by the high prices.
I can't imagine Christmas Eve without carp. I can't imagine there could be some other fish on the table. I don't pay attention to the price. That's why I'm here. No matter how much it costs, it has to be served at the table.
But a survey cited by Political Weekly showed others may not feel the same. It said as many as 40% of respondents did not want to buy carp this Christmas.
Nike reported its best quarterly revenue growth in a decade, barring one quarter, on Tuesday. The company also beat profit expectations as North American shoppers rushed to stock up on sneakers and sportswear before the holidays. Sales in North America, which is Nike's largest market, surged 30%. The company boosted sales through larger discounts and more promotions. That was to reduce excess inventory through the quarter. Wealthier shoppers also helped keep up a health crisis-led boom in athletic apparel sales. Nike's finance chief, Matthew Friend, said the firm saw record demand during the key Black Friday and Cyber Monday period in North America. Cyber Monday demand was also up by 3/4 from last year in Europe, Africa and the Middle East. Revenue jumped 17% to $13.3 billion for Nike, above analyst projections of $12.5 billion. That was Nike's best showing in 42 quarters. The only better quarter was the fourth of last year, when retail stores started to open up after lockdowns. The firm's margins were pressured though, largely due to a stronger dollar and higher logistics costs. Investors were pleased with the overall update and shares surged 13% in aftermarket trading. Tesla will start another wave of layoffs and freeze hiring in the next quarter. That's according to the news website Electrek on Wednesday. It cited a source familiar with the matter. The electric car maker did not immediately respond to a Reuters request for comment. The reported move comes at a time when Tesla investors have grown concerned CEO Elon Musk could be distracted managing Twitter. Musk bought the social media platform for $44 billion in October. Tesla analysts have also cut their price targets on the stock. They're worried that weakness in demand from China could weigh on the automaker's deliveries next year. Tesla shares have lost around 60% of their value so far this year and hit a more than 2-year low on Tuesday.
U.S. existing home sales slumped to a 2.5-year low in November as the housing market continued to be squeezed by higher mortgage rates. November sales plummeted 7.7%, the National Association of Realtors said on Wednesday. Sales have now declined for 10 straight months, the longest such stretch since 1999. The biggest impact on home sales this year? Higher mortgage rates driven by the Federal Reserve's interest rate hikes, the central bank's fastest rate hike cycle since the 1980s. The Fed is seeking to slow unacceptably high inflation by bringing down demand for everything, including housing. The average rate on a 30-year fixed-rate mortgage surged above 7% a few months ago, the highest since 2002, according to data from mortgage finance agency Freddie Mac. Though the rate retreated a bit last week, it is double what it was that time a year ago. The housing market boomed early in the health crisis as Americans sought bigger properties to accommodate home offices, driving up prices beyond the reach of many. Even with demand down and sales soft, supply remains tight, keeping home prices elevated, though the pace of price increases is slowing. The median price of an existing home increased 3.5% from a year earlier to $370,700 in November. It was still the highest house price for any November, and prices remain about 37% above what they were before the health crisis. Wall Street's main indexes on Wednesday posted their biggest daily gains for December so far. lifted by upbeat earnings from at least two corporate giants and a jump in consumer confidence. The Dow closed up 1.6%, while the S&P and Nasdaq each gained about 1.5%. U.S. consumer confidence rose to an 8-month high in December as inflation retreated and the labor market remained strong. Ross Mayfield is investment strategy analyst at Baird.
I think if there's one thing kind of holding the economy together, the U.S. economy and maybe even the global economy, it's the resilience of the U.S. consumer. And to the extent that the consumer is kind of perking up a little bit at a time when you would expect, retail sales to be coming down, at a time where you think inflation might finally starting to weigh on the consumer, they're continuing to show resilience. So I think that data point today could be providing a little bit of juice to the markets.
And speaking of that consumer resilience, Nike shares soared 12% after beating profit expectations for its second quarter on strong holiday demand from North American shoppers. And FedEx, which sparked a market sell-off in September after pulling financial forecasts, provided financial guidance and announced plans for $1 billion in cost cuts, sending its shares up more than 3.4%. Still, Wednesday's data also showed that U.S. existing home sales in November slumped for the 10th month in a row to a 2.5-year low as the housing market was hurt by higher mortgage rates. But the data may be fueling investor hope that the Fed could ease up soon on its tightening monetary policy.